Okay. Well, thanks very much. Yvonne mentioned that there was a fiscal crisis here in the 1980s. There's another one now. And the completion of this hat-trick I intend to have nothing to do with. I want to begin by just reflecting a little bit on something that the economists amongst you, I'm sure, have often had to observe in the past, and that is, aside entirely from the crisis that we're now in, there has been a record of extreme macroeconomic volatility in Ireland. Now, that tends to be the case with small countries, but even allowing for that, our overall macroeconomic performance has tended to be, good in spurts and then a bit of a crash and then good in spurts and so on. And this macroeconomic crisis is the second in a generation. I think it's actually more difficult to resolve than the 1980s crisis, and I'll explain why I think that in a minute. But I think we need to see it against a background, and the background is that there's been a record of boom and bust and of pro-cyclical economic policies, which have tended to exacerbate the underlying economic cycle. All countries face these risks, but for some reason it just seems to be worse in Ireland. And that's a chart that hasn't come up, so I'll tell you what it would have said if it had worked. It looks to me like the equipment ain't working, folks. There's another one. Oh, some of them work and some of them don't. How about that? Okay. Well, what this chart would have said, if you had been able to see it, it would have charted the historical record in annual and quarterly real output in the Irish economy. And the charts would have shown that it's been very jagged, and you've had periods of very rapid output growth and then periods of very poor performance. I think the crisis that we're wrestling with now is in some ways worse than the crisis in the 1980s, which I'm sure Gemma Hussey will remember with great affection. And we eventually dug our way out of it after nearly a decade, really, of very poor economic performance. I think this time it's kind of more difficult. First of all, the banks didn't go bust in the 1980s. Government did, but the banks didn't. We didn't really lose competitiveness as much as we have this time round. Even with some improvement in the last year or two, we're still uncompetitive on costs with our immediate economic competitors elsewhere in Europe. We don't have an exchange rate of our own now. And back in the 1980s, one of the things that helped to get us out of the mess was a well-timed devaluation of the Irish pound in 1986. We can't do that anymore, so we have to restore competitiveness through pushing down on domestic costs without being able to make an exchange rate change. And of course, we're operating in a weak international economy. That wasn't really the case in the late 80s. The international economy had begun to recover. The final thing is what worries me most. There was a period when the international bond market operated as a bit of an ATM machine for European governments. European governments could kind of borrow as much as they wanted without moving the interest rate against them. That's changed now very dramatically in the last 18, 24 months. And the situation now is that some European governments can borrow as much as they want, partly because they don't want to borrow very much, but the peripheral European states, Eurozone states, particularly Greece, Portugal, Spain and Ireland, have faced very steep increases in borrowing costs. Just this morning, the NTMA, which borrows for the government, paid 5.5%, over 5.5% on 10-year bonds, which is a very steep rate of interest. And it's this new phenomenon that unless your budgetary policy is prudent, the interest rate will move against you. That's what did for the Greeks in the end, and they effectively lost their economic sovereignty in a bailout by the IMF and the European Union. So these sovereign credit markets remain very difficult. This chart shows what's happened to government revenue and spending up to 2009, and you can see that government spending kept running ahead, but government revenue just collapsed. That's another really good chart, which doesn't like the Donegal air. Debt service burdens have risen very rapidly, and there's another one. I'm really sorry about this, folks. These things just didn't. I really don't understand why they didn't come through. Okay, I want to.
Do you want to try taking them off the stick, Colm? That's the copy I got now. If you had your stick there.
I'll try it, yeah.
Try it if you don't mind. Sorry about this, but maybe the JPEGs didn't.
Anybody got a scanner?
I'll just. Do you want to talk away and I'll try and get it for you?
I know. You go ahead then. So.
It's at this stage that the old radio era used to play O'Donnell and
It's invalid. No, Pat is invalid.
No, it's okay. I know why that is.
Well, I don't think I've chanced that, Joe, or everyone will leave.
Dum 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 dum. Now,
it is right up top.
McGill, 2000.
Yeah, that's it. See if it comes.
There you go. You'll have to scan through it.
But sorry. Let's. Can you full screen it?
Oh yeah. I don't like those X's there, though.
Yeah, here we go.
See them?
No, it's
It's
fine.
not working.
Okay, fine. Okay, that's okay.
Sorry about that.
Okay. That didn't work. Maybe it was the community singing that put it off. I want to try and get around to the topic, which is the issues concerning the reform of the economic governance system. But I've really been just trying to place all that in context. What we've seen again is a really massive failure of economic governance. I mean, real economic activity in Ireland has fallen considerably more than anywhere else in Europe, bar one or two places over the last couple of years. We've had relatively a bigger banking collapse than anywhere else, bigger banking collapse relative to the size of our economy. The rise in unemployment's been spectacular, and so on. So lots of countries have had a serious economic downturn just recently, but we've managed to deal ourselves a particularly bad hand. And it's going to take 4 or 5 years to dig our way out of it. Most of the damage, in my view, is self-inflicted, and it could have been avoided. The two words I don't want to hear are Lehman Brothers. And, lay off the poor, unfortunate Lehman Brothers. They're innocent. There were plenty of warnings. There's a fashionable line coming out now that I was sure nobody foresaw that this was going to happen. Well, nobody for sure foresaw the full dimensions of the macroeconomic disaster that has unfolded. But every single component of it was warned against. But, what's said doesn't matter. It's what's heard that matters. And there have been institutional weaknesses at many levels, which I think made a big contribution to the crisis. I think the sources of poor macro management involved institutional failures, notably at the commercial banks and at the central bank / financial regulator. There has already been a quite detailed report published on the failures in the central bank and the financial regulator, the report by Patrick Honohan. There hasn't really been as detailed a report on the failures in the commercial banks because Regling and Watson didn't have access. They weren't, Patrick Honohan was sitting in the governor's office in the central bank, so he could dig up the files and write a pretty detailed report, which he did. Regling and Watson weren't able to do that. But a commission of inquiry has now been established, as you know. It's to be led by a man from Finland, under, I think, Yvonne, the same legislation that you operated under when you were inquiring into the problems in the Dublin Archdiocese. And there's no reason why that Commission of Inquiry into the banking system can't be as comprehensive as Yvonne's report was. I think when it's all done, I think it will address some of the issues that Jim O'Leary was talking about here this afternoon, including the role of the boards of the banks, the role of senior management, important questions like where regulators told the truth, or where they did they ask to be told the truth. If any of you have a little bit of spare time over the next few days, a good laugh is to have a look at the PowerPoint presentation to the Department of Finance that was presented by Anglo-Irish Bank on the 18th of September 2008. That's to say, after Lehman Brothers collapsed. And it's up on the Oireachtas website. It's a part of this package of stuff that was released a few days ago by the Public Accounts Committee. And it's a PowerPoint presentation, and it is the finest piece of concentrated chutzpah that I've ever come across in my life. This is at a time when these guys could barely borrow overnight, and within a week of the need for a massive bailout, and they breezed into the Department of Finance, and you should just have a look at it. It's about 15 or 18 slides, and it's just a quite amazing document. The Commission of Inquiry into the banking system, I think, needs to look at the role of the boards and senior managements in the commercial banks, and again and afresh at the failures that occurred at the level of the central bank and the financial regulator. But there were other issues of poor macro management, including populist public spending bubbles. I mean, we had a credit bubble, we all know that. We also had the most extraordinary public expenditure bubble starting back in 1999 and 2000. And that was the second populist public spending bubble in a generation. A third feature that I highlight in this slide is there is a political and administrative system in Ireland which tends to be dismissive of dissent. And when I say dissent, I don't mean people whinging and shouting and roaring saying we need more money for the west of Ireland, or we want more money for farmers, or we want more money for the poor. I mean reasoned dissent from the strategic direction of macro policy. And I'll give you a series of examples of the dismissal of dissent. We chose in the late 1990s to abandon our independent exchange rate and to join the euro. And some economists were in favour of that, but quite a few of them were against it. And the debate at the time was along the lines of, there is no alternative. This is what we're going to do. And there was an unwillingness to thrash out the pros and cons in a grown-up fashion. In Sweden, where they eventually decided not to join the euro, they appointed a royal commission. They've got a monarchy over there. I'm not going to propose that, incidentally, as a reform. But they set up a royal commission which produced a stunningly good report, a model report on all the positives, all the negatives about Sweden abandoning its currency and joining the euro. And they had a long debate in Parliament and went through the thing properly and eventually said, we're not going to do this. We instead had both government and opposition parties saying, this is what we're going to do, we're in favour of Europe, bingo, let's do it. In other words, a political and administrative system dismissive of dissent. Some years earlier, at the end of 1992 and in early 1993, there was a completely avoidable currency crisis that some of you may remember when sterling fell out of bed. The value of the Irish currency actually rose involuntarily. We didn't want it to, but it did. And the politicians just fiddled around for 3 or 4 months, put the economy into a quite unnecessary tailspin, eventually, of course, cut the exchange rate back to where it should have been in the first place, and spent the 3 months denouncing guys for saying the bloody exchange rate is too high and we should cut it, and accusing people of being speculators and all sorts of... a bishop, actually, I've forgotten which bishop, a bishop inveighed against speculators in the public media during this discussion. And just more recently, on this question of people being dismissive of dissent, just down the road from here in Bundoran, shortly before his demise, Bertie Ahern not merely invited his economic critics to commit suicide, he got roundly applauded by the ICTU conference, if you have a look at it on YouTube. So there is a tradition in Ireland of dissent from the groupthink policy of the day to be dismissed instead of valued. And it's important in a small, rocky little, windy, wet island in the North Atlantic where we really are on our own. It's important to value dissent and try to avoid mistakes. The public debate instead is dominated by lobbyists. Recent example, the Construction Industry Federation and, to my surprise, IBEC, the employers group, and the construction industry trades unions released a document a few weeks ago demanding increased public investment in infrastructure, which means construction to you and me, so the infrastructure sounds better. Now, if these people had said that we were overdoing it 4 or 5 years ago at the top of the bubble, I'd have some willingness to listen to them. But they think we should expand the public investment programme now, produce some ghost infrastructure to go with the ghost housing estates that litter the countryside. But they never said that our expenditure on construction and investment zone was too high at the height of the bubble, and it most certainly was. It follows that there are no circumstances in which these people would recommend less spending on construction. That those circumstances just don't exist. We've tested the hypothesis. The whole public debate is just dominated by lobbyists and not by analysis. I think there's a whole string of things that we need to do by way of reforming the political system, and one that was recommended by the review group last summer that I chaired was to scrap the Seanad. I was reminded during the week, I was talking to a pal of mine about this, that back in the 1960s, and I hope Gemma won't mind me saying that you probably remember this, there was a discussion group called Tuireann. I don't know if you were involved.
Before my time.
Oh, I believe you. I apologise. But I recall, I think it was Barry Desmond, produced a document about reforming the Seanad in about 1965 or 6. Now, a rule of thumb, if you're still talking about reforming something 50 years later, it's time to scrap it. A second recommendation that we made was that we should go for a single-tier system of local government. And we have, as you probably know, not merely a highly centralised central government and county councils and so on with very limited revenue-raising powers, but we have regional bodies in between and town commissioners and town councillors underneath, a formula that's now to be introduced to the lucky citizens of Dublin who don't have it at present, but they're going to, via an elected mayor and a regional council elected apparently from the 4 Dublin local authorities. So you can't have too much of a good thing, and politicians are a good thing. So we're going to have more of them. My suggestion is that we should have a simple central government and a single-tier local government system. Obviously, there's plenty of quangos that can be spring-cleaned as we go along. Finally, on this issue, in the Irish Public Service, we've seen under the pressure of events in the last 12 months quite a lot of external appointments to things, including most notably perhaps a new governor at Central Bank from outside the civil service system. Plus the Department of Finance has gone off and hired a few people from the business and financial world and brought them in to important positions in there. But this is under pressure of a crisis. We're really going to have to move to a system where there's a lot more mobility between the public and the private sector, with open recruitment in the public administration system at all levels. That means much enhanced mobility, and it means portable pensions. There would have to be a big pension reform, I think, in order to help make that happen. I want to have a go at the media. No decent speech would be complete. I'm convinced that the public debate on economic policy here in Ireland is just not serious enough. It's got to do with the country being too flippant small. There aren't huge numbers of specialist correspondents in all the newspapers. The newspapers are not, hugely profitable anyway. A lot of people think the print media may be in decline. I think a lot of the broadsheet media have gone down market. There is a particular obligation on RTE since it's tax funded. And RTE has managed to bring a lot of its current affairs coverage down market. And some of its current affairs coverage seems to be schizophrenic. It seems to think that they're partly accountable to the entertainment division in RTE as well as to the news and current affairs division. The media, again, tend to be quite willingly fed by lobbyists, vested interest groups and the PR industry. A huge percentage of what's covered in the papers is rewritten PR handouts. I've been over in London a bit over the last while, speaking at conferences at various think tanks and so on that they have over there. And I was quite surprised to discover how many of them there are. They really have accumulated, if that's the term, over the last 20 or 30 years, great depth in the policy analysis industry. All the political parties have not in-house research departments. They have sponsored and independent think tanks working away on policy stuff. The Tory and Lib Dem parties who are out of office, back in office now for the last couple of months, with a huge amount of work done while they were in opposition through these kind of think tanks on serious policy issues. They also have access to the civil service while they're in opposition to a much greater degree than here. That's beginning to happen a bit here. I think we don't spend enough money on that kind of stuff here in Ireland. I just want to finish with a couple of points that occurred to me listening to Dan Boyle and Jim O'Leary and the others speaking this afternoon about the banking system. The inquiry will commence now shortly, and I think it's a pity that it took so long. It should have been started quite a while ago. One view expressed that I want to echo is that the role of auditors in the fiasco that's occurred really has to be on the agenda of the Commission. Obviously, it will look at the performance of the commercial banks first and foremost, then at the performance of the central bank and the financial regulator, but it also needs to look at the performance of auditors. It is a fact that those banks, the two, Anglo and Nationwide, that are totally insolvent, and the others, Allied and to a lesser extent perhaps Bank of Ireland, they were all getting the thumbs up from auditors right up to the very end. Indeed, a report was prepared subsequent to the famous guarantee at the end of September 2008. There was a thumbs-up report prepared for the Department of Finance by another firm of auditors, suggesting that the problems weren't that serious. I think the Commission of Inquiry should look into all of these things and should consider whether there weren't serious failures by auditors. Second last point, there is also to be an external inquiry now into the Department of Finance and its performance over the years, and that's fine, and nothing wrong with that. There has been a tendency for people, I think, to blame finance a bit too much for the banking fiasco. The central bank was set up in 1942. It has a staff of over 1,000. The central bank plus the financial regulator has a staff of over 1,000, an operating budget of just under 200 million quid a year, and all the statutory powers it's ever asked for. People seem to think that the Department of Finance is responsible for supervising banks and worrying about them. It isn't. Central Bank is, and that's true in most countries around the world. So I'm happy to hold finance responsible for all sorts of things, but not really for failing to bark, having hired a dog in the form of the central bank. The other point, though, that I think we need to focus on in repairing our governance system in the banking and monetary policy area, there's really two things you can do about this kind of banking collapse. One is you can try and prevent it from happening, and the second is you can try and clean up the mess at minimum cost. We failed to prevent it from happening, and it's not at all clear that we've come up with the cost-minimizing way of dealing with it either. There are some people who believe, some economic writers who believe that financial crises are kind of inevitable and that they're just going to happen from time to time. We have had several collapses of insurance companies over the years. We never had a collapse of a sizable bank, a couple of collapses of small ones, but we had two collapses of sizable insurance companies. And that there have been banking collapses in lots of countries around the world. Well over 100 of them have been documented in detail since the Second World War. So clearly we need to try and prevent another collapse from happening. As Jim O'Leary stressed this afternoon, it won't, because nobody's going to lend enough money to the Irish banks for them to go off and lose by lending it to people they shouldn't lend it to. So that problem has kind of solved itself through the horse bolting for the time being. Clearly we need to try and ensure that the regulatory and supervisory system works the next time. But we also need to focus on what happens when a financial institution does get into serious trouble. That means we need a bank resolution regime. And we saw what that looks like in the case of Quinn Insurance. When Mr. Elderfield was appointed regulator, he decided he didn't like the look of it. He slipped off down to the High Court, and under the 1983 Insurance Act, he had the prerogative of seeking the appointment of an administrator, which he went ahead and did. No similar arrangement is on the statute book for banks, and still isn't, 2 years nearly after the balloon went up. Of course, it's reasonable to ask why we had to wait for action on Quinn Insurance for so long, when the problems affecting that company were pretty obvious some years back. So I just want to wrap up by apologising for the fact that my beautiful charts weren't visible, and just to say that we really need to be conscious of the fact that this is a second really big macroeconomic policy failure in a generation. What happened in the 1980s shouldn't have happened. It should have been dealt with quicker. It's now happened again, and in a way it's even worse. I don't think it's possible to just shrug and say these things happen. There's nothing we can do about it. There has been a system failure. It's been repeated. And I think it's time to take a very hard look at our political and public administration institutions and about the way we do business in regulated industries like banking. Thank you.